This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, we are finally there. After traversing, Monday to Thursday, we are finally at the best day of the week, right? For all of us here. You're with us here on a fresh new edition of Bazaar. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia. Rima joins us as well. Guys, hi.
Hi, good morning.
It was a tough one, right? But we made it. We made it to Friday, and the Bulls didn't make it, though. I mean, the Bulls have been facing quite a bit of pressure, and I think it's after 4 weeks that we're going to see the market end in the red this week. So, those nervous 90s, as we keep calling it, is something that we couldn't cross the hurdle.
A bit of a case of dashed hopes, right? Monday gave you so much hope that maybe on Tuesday we're going to get there, all-time high levels, but didn't quite.
This is the worst, right? You get to, not even nervous 90s, nervous 99s. You got to within 10 paisa of a high on the Bank Nifty, and then the market went poof. Well, we got another positive handoff from Wall Street. The question is, will it matter, right? Because, it's not mattered for the last 2 days. And I think it may perhaps not matter once again. And I'll tell you why. The broad thesis has been that this is a pullback. The last few days has been a pullback in a broader uptrend. But what has happened is that the overall color, the texture of the market has worsened a little bit, worsened actually quite significantly, especially yesterday, even for broader markets, right? Mid caps, small caps, etc. have been strong. There's still the stronger part of the market, but it has worsened. But let me start with first things first, right? The handoff from Wall Street, which is once again positive. The Nasdaq is up 1.5%. The S&P is up about 0.9%. Data was strong. Initial claims, the Philadelphia Fed business survey, all was positive. There was Fed speak, which was hawkish, and markets responded. Yields went up. The 10-year went up about 8.5 basis points. The US dollar, I mean, this is problematic, but we've been pointing this out, that the dollar looks like it's bottomed and it perhaps will move up. It's now at 103.51. We were at 101 point something just 10 days back. So there has been an upward move in the USD. Markets, by the way, market pricing, Fed swaps are now pricing in close to a 50% chance of a hike in June. All right, so markets are pricing out rate cuts, pricing in rate hikes. And this is something which we've happened over and over again. The question, though, many are asking in the US is this. There has been, it's a continuation of positive headlines around the debt deal, how it's going to get done by next week, middle of next week, etc., etc. And we saw similar headlines last night as well. But could the US market be seeing a buy the rumor, sell the news kind of a moment? Will we see that? Right? Are things going to remain so strong in the U.S., so hunky-dory in the U.S., even as, the chances that the Fed is on the cusp of rate cuts, a rate cutting cycle, or maybe, no more hikes for sure, that prospect keeps on diminishing. The Nasdaq was up 1.5% even as yields went up almost 10 basis points. So will this last is the question. Some of what we're seeing last 2 days in the U.S. is also driven by optimism around the debt ceiling. But, the debt ceiling issue is, as I said yesterday, like the boy who cried wolf, right? Never really causes any big problems. It causes some nervousness, but at the end of the day, it is done. Looks like that will be the case this time around as well. Now, the market here in India has lost steam on its own without any help from U.S. markets. Now, you can say that it is compensating for the outperformance we saw earlier, and that perhaps will be true, but it has lost steam over the last few days. As I said, the texture has worsened. Nifty, by the way, Nifty ended lower. The supports, I mean, this is the cutoff level, and we're getting closer and closer. The 20-day has also risen up. The 20-day for the Nifty stands at 18,078. We closed at 18,130. So you must, if the bulls have any hope that this is still an uptrend, this level must hold. The 20-day must hold, which is 18,078. Bank Nifty is looking a little better, a little different. It closed higher in trade yesterday. Supports for the Bank Nifty also come in at the 20-day, which is a little further away at 43,214. So, we closed at 43,752, not very far away, but these are levels, short-term reversal levels, which must hold for bulls to feel that at some point we're going to come back and resume that uptrend, resume that move higher. It's not as if a lot has changed here in India in terms of data, earnings, etc. But the market sometimes just does its own thing, and what it's doing is it is taking some of that sheen off, and broader markets are also coming under some selling pressure. wait and watch the first 1 hour, 2 hours, let the price action tell you. Maybe we'll see a repeat of what we saw yesterday. So no point chasing anything higher in a market like this. Sonia.
Oh, absolutely. I strongly believe that the tide has turned in the global markets. I mean, you can see it in the tape, right? The US market, 3 days of gains.
Yeah.
Look at what's happening with Japan. I mean, that market is at the highest level since 1990. And, all the experts that we were speaking with in the last many days have indicated that Japan is the top market. So in that context, if global markets have turned the tide and if there is this fear of the debt ceiling and all is receding, then perhaps it's just a matter of time before our markets resume their upside as well. So that is the feeling that I'm getting this morning. The Nifty, however, as you said, continues to face resistance. I think 18,440 was the high that we hit on the 15th of May, which is Monday. As Rima was also pointing out, we started the week with a bang and then, it all fizzled out from there. So that's the level to watch on the upside. But give and take everything, this market has been unable to get out of the trading range, which is 18,100 to 18,400. There was also large selling from, not too much, but there was selling of almost 850 crores from domestic investors overnight. FIs continue to buy. It's been about 16 days now that FIs have been buying in the cash market. So that continues to come in thick and fast. And earnings season has been quite strong so far. Post-market, as of course, we have Interglobe Aviation. But even the larger guys, right, whether it's SBI, ITC, all the earnings that came in the last 48 hours have cheered the market. And there's lots of positives to talk about over there. So that's something that the market could perhaps latch on to. We are also going to talk in greater detail about this SEBI proposal that has come through for a uniform total expense ratio, or TER as we call it. This will, of course, bring transparency in the costs that are charged to unit holders, but we'll get into more, the nitty-gritties of that in a bit. But for now, I think the SGX is indicating a start in the green. Whether we get above that hurdle of 18,450, time will tell. But there doesn't seem to be any major trigger today to maybe get us above that.
I just want to also point out that the Nifty Bank has been fairly resilient. Yeah. Take the performance of week to date. Week to date, the Nifty is down 1%, while the Nifty Bank is just down 0.1%. To put it in numbers, on Monday, the all-time high, not the all-time high level, the intraday high was actually 18,458. I think on closing basis, we went to about 18,440. So the Nifty's fallen about 328 points from that swing high, the high that we hit on Monday. But the Nifty Bank, from that high of 41,151.7, the Nifty Bank has only fallen 399 points, which basically means that the Nifty Bank hasn't seen too much of a correction. Week to date, the Nifty Bank is only down 0.1%. You spoke about good earnings overnight. It's not just, Interglobe Aviation. Even Bata's numbers look good. Revenue growth 17%, margins much better than what the street was anticipating. The margin decline stemmed at just 100 basis points. United Spirits as well, strong numbers. Net revenue growth at about 15.5%. So at least the large cap companies have reported good numbers. That said, the big bulk of the earnings season appears to be behind us. Today, 3 Nifty companies report their numbers: JSW Steel, NTPC and Power Grid. X of that, many F&O stocks will report numbers. So Bandhan Bank, Muthoot Finance, Zomato. Zomato will be important after yesterday what Swiggy had to say about the food delivery business turning profitable. Glenmark, PNB and a whole host of others like Abbott, Alchem too will be reporting numbers. On the weekend, on Saturday, you've got Divi's Laboratory reporting numbers, and on Monday, you've got BPCL in the large cap space. But the bulk of the earnings season now appears to be behind us. This morning, the SGX 50 is suggesting a bit of a flatter start. But let's also tell you what we've lined up in the first half an hour of the show today. We'll get you updates from markets across the globe, and Suresh Tantia of Credit Suisse will join in to discuss the global trade setup. Later on, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 a.m., we will do a fundamental stock analysis with Siddharth Khemka of Motilal Oswal Financial Services.
Okay, well, that's what you'll get to see in the next 2.5 hours. But let's kick it off with one of the best voices in the business. Chris Wood of Jefferies says the topical issue for investors today is whether it is really practical to assume an agreement on the debt ceiling ahead of the approaching deadline amidst the continuing evidence of intensifying partisanship. He says greed and fear had some doubts, which is why it makes sense at a minimum to bet on an increase in volatility. Meanwhile, he says the obvious compromise is to delay the debt ceiling debate until September 30th, which would allow debate over the debt ceiling and the budget to proceed simultaneously in the Congress.
Well, let's get you some money market views as well. We have Lakshmanan V of Federal Bank who says the dollar index rose to a 7-week high of 103 plus levels yesterday as hopes of an imminent US debt ceiling deal went up. He says, added to that, the yuan fell to a 6-month low, put pressure on the rupee, and it saw a 2-month low of 82.65. Rupee did move sharply in the last 60 minutes. He says near-term forwards also went lower, tracking the overnight swap rates, and the focus today will be on Fed Chair Powell's speech after market hours. He expects a range of 82.35 to 82.88 to a dollar for the next few trading sessions.
I do want to also focus on the bond market. Lakshmanan B says that the bond market has been rallying with expectations of a dovish pause by the RBI in the next policy. He says all positive news has been discounted in the current market, and he adds that government bonds saw some selling pressure due to the rise in US yields and short positions being built up for the weekly central government bond auction. He also says the 10-year benchmark bond yield looks supported near the 7 to 7.03% zone.
Okay, well, Suresh Thantia is Director of Investment Strategist at Credit Suisse. Is joining us now to take some questions on the global setup. Suresh, good to have you with us here. Thanks very much. Talk to us a little bit about what we are seeing out there in the US. What's your team making of it? Is it sustainable? The market prices out rate cards, prices them back in. That's been the one constant thing over the last year and a half or so. Markets continue to do their own thing. What's your sense?
Certainly, there's a lot of uncertainty because the data has been quite mixed. One day we get data which shows that economy is much more resilient, but then the other indicators suggest that we are going to see a slowdown in the economy. That's why investors have been flip-flopping when it comes to the rate outlook and also on the equity market. I think broadly, it looks like the economy has been much more resilient compared to earlier expectations. That's why the equity market is going up, because there are a lot of shorts in the market. Every time you hear some positive news flow, whether it's a debt ceiling deal or the economic data, those shorts are being covered. But having said that, I think the upside from here seems very limited given the expensive valuation. So we are advising investors and clients to stay on the sideline, because markets are going to remain range-bound in the next few quarters.
Okay, so stay on the sidelines. Markets are going to remain range-bound. Suresh, good morning. I remember, I think Japan has been one of your favorite markets for a long time now. Of course, people are just noticing the moves right now, but you've been bullish on it for a while. Tell us, as a strategist for the rest of the year, which are the markets that top your charts, and where does India feature on that list now?
So we are focusing on markets which are beaten down, and that would be China. Because over the last 2 years, China has come down by 30-40%. The economy is reopening, although the recovery is not as strong as earlier expectations. But still, economy is going to recover as people go out and spend money. And the earnings are going to grow by double-digit this year. So we see maximum upside potential in the China equity market compared to the rest of the world. On Japan, yes, certainly there's a lot of optimism right now, but we see limited gain from here because we expect the Japanese yen to strengthen going forward. And whenever Japanese yen strengthens, it tends to be negative for the Japanese equity market.
So Indian markets are likely to be sideways. Suresh, morning, Rima here. What about the US markets? Are you worried about a deep recession pulling down the US indices? They could see a sharpish correction through the course of this year?
So we are not expecting a deep recession in US because, number one, the companies don't have a lot of refinancing risk, at least not for this year and next year. The next big maturity will come in 2025. So they are not under pressure to refinance their loans or bonds. And number two, household balance sheet is still quite healthy, despite the fact that rates have gone up. So at worst, actually, we could see a shallow recession. Because rates have gone up and lending standards are being tightened by the banks, but we are not expecting a deep recession in the US economy.
Sonia, you mentioned Japan, right? I remember, by the way, Warren Buffett has now become more bullish on Japan. in April, I think he made some comments. But I remember watching a video in the late 90s or the early 2000s. Buffett described Japan as a great stock market without great companies.
Yeah.
You know, basically because.
But isn't it a bit late in the day to become bullish on Japan? I mean, the market has rallied so much.
In April, because it's just been, 3 weeks of rallies, right? But for 30 years, the market didn't do anything. 30 years, right? So there is a bit of a lift which seems to be coming through. Suresh, here in India, any specific pockets that your team likes? What are you guys focused on in terms of investment themes?
So broadly, Indian equity could remain range bound. Nothing to do with the economy because the economy is doing okay, earnings are coming through. It's just that the valuations are expensive. So we see better value in rest of the Asian markets. Within India, we still like private banks because I think the loan growth is quite strong. Margins are stable or expanding. So we do expect double-digit growth in terms of the earnings for banking sector, and that should support higher prices for banks.
So why are you leaving public sector banks behind? I mean, SBI had a fabulous 17-18% retail loan growth as well, right? So in the PSU basket, do you like SBI as well?
We don't. I don't have a specific view on the stock, but sure. Yes. So yes, public sector bank also look interesting, but when we look from a fundamental risk reward perspective, I think there is better value in private banks compared to public sector banks, because end of the day, it's quite likely that global economy is going to slow down, and that will have impact on the risk appetite of the investors. So it's quite possible that foreign investors are going to sell down on the names or sectors which are more high beta. And that's why we prefer more high quality private banks over public sector banks.
Any other sectors or themes that you like in India, Suresh?
Consumption is still a good story for us because economy is doing well. We are seeing across the board all the economic indicators suggesting that economy is going to grow, earnings will be up double digit. So this story has been playing out for the last few quarters, and we do think auto and all the consumption sectors, they should do well.
Okay, Suresh, we'll let you go on that note. Thanks a lot for joining in. Have a great weekend, and thanks for speaking to CNBC-TV18. Well, that is the word coming in from Credit Suisse. They say the upside seems limited, but the market that they really like now is China. They like beaten down markets and they believe there is a valuation upside there. Let's do one thing. Let's take a quick break. Plenty of stocks to talk about on the other side. Our entire team will be with us, so don't go anywhere.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell. Right at your fingertips. Making gold your strategic advantage.
Without which your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
कैसे करते हैं ट्रेड? Try 5 paisa. Powerful charts and research tool. One click trade is the new cool. Get access to live market data. Margin funding bhi hai re beta. 5 paisa app karo install. Trading made simple, simple for all. With 5 Paisa's wide range of products. Yahan wahan chahe ho jahan. Simply trade on the go. Aise karte hai trade. Soch mat chote, install maar. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. Let's drill it down then to the individual stocks you should keep on your radar. Our entire research team is standing by. This is CNBC-TV18's list of top stocks for the day. But Sonia, the numbers which stand out today are Interglobe Aviation. I guess intuitively we were expecting good numbers given how many people are traveling right now. But how did the numbers shape versus expectations?
So, you know, guys, I just realized that Interglobe, United Spirits, ITC, all the numbers are really good. So people are traveling. They're drinking, they're eating, they're smoking. So they're doing all the they're covering all forms of pleasure.
As long as they're not doing that on board, right? In the air.
Yeah, that shouldn't happen. But yeah, Indigo's numbers have been very, very good. And I'm going with green on the stock today. The total income was up almost 80%. The EBITDA was very strong. The margins have come in at 20%. And it's a profit. It's a profit of over 900 crores that the company has reported. I guess, you know, the expectation was that they would come through with a 1,000 crore profit this time around. Now, if you look at the EBITDA margin trend, right? I mean, this is the trend on the last 4 Q4 performances. And it's been a really big jump that they've seen, both because of higher demand, lower fuel costs, better yields, better utilization, and all of that has helped in the operational improvement. Now, the revenue per seat kilometer, which is RASK that we track, that as well has improved to 4.68 rupees versus 3.97 year on year. And the management was very bullish on the conference call. They said they expect a higher growth in FY24 compared to 23. They are continuously expanding their international network, and they are looking to add 40-50 aircrafts in FY24 itself. Also, with the issues that, Go Air, etc. have faced, Indigo is just looking to grab more market share, which I think will result in a better performance for them.
Absolutely. Well, we'll keep lookout for all these stocks. Now, another thing which has happened is asset management companies have received or will be closely paying attention to what SEBI, the regulator, is really proposing in terms of the expenses that they charge to investors. So this is called the TER, Total Expense Ratio. And the 40-page consultation paper was released yesterday evening, late evening. Now, let me just briefly tell you what this is about. So currently, things like transaction charges, like brokerage charges, when mutual funds buy and sell securities, they pay the brokers through which they execute these trades. GST, taxes, all of these fall outside the ambit of the base TER. So mutual funds will charge, whatever, 1.5%, 2% is the total expense, the TER. And then on top of that, they will add on what they incur as expenses on brokerage, transaction charges, taxes, etc. SEBI has now proposed that all these expenses should be brought within what is called the TER, the total expense ratio. So there is a very clear message to investors. There is transparency that this is the cap, and all costs that mutual funds incur should be within that. It's proposed new slabs, that is expense slabs for equity AUM and non-equity AUM. The relief for the mutual fund industry, right? This is their profit. This is the money that they make, mutual funds make, the TER. And the fear was that the total expense ratio will not be lifted, and mutual funds will be asked to subsume these extra costs within the existing TER, which is not the case. So SEBI has proposed lifting these base TER levels to slightly higher levels to accommodate for some of these extra costs, extra charges, which is the relief at the margin. One more thing, TER slab will be at the level of the AMC and not the scheme level. I spoke with a bunch of mutual fund CEOs. Of course, I mean, this is incrementally negative, but compared to what was being feared, what will come, I think this is at the margin a bit of a relief. Mutual fund stocks, Sonia, have done very badly. I was looking at the largest HDFC AMC. From the highs, the stock is down almost about 55-56%. And had this been made to be subsumed with the existing TERs, it would have been a body blow, which is not the case. So incrementally at the margin, with the stock performance, I think this may not be that bad. And,
I was speaking to a couple of people as well, and they said that there is this huge distributor practice of pushing NFOs. And, switching from existing schemes, etc. All of that will be curbed now. So in general, it's not only helps cut costs for investors, it also helps a lot of these malpractices to be
That's the aim. That's the aim of the regulator. And it's actually 40 pages. I mean, I wrapped it up in 1.5 minutes. And, we'll continue to pay attention to this.
How much time did you spend reading it? Be honest.
Did you make it till the end?
Very little.
Did you make it till the end?
I read the whole thing, yes.
Well done.
You should have just asked ChatGPT to summarize it for you. That's how it's done these days, right?
Next time, Sonia.
Okay, let's move on. But thanks, Prashant, for that. Mangalam is joining in to tell us about a couple of numbers. Mangalam has Bata and Concord on his list. Over to you.
Well, for Bata, it's a good set of numbers coming in, better than the street was, what the street was anticipating. 15% revenue growth is what we were factoring in. The company reported 17% growth. The margins came in at 23.4% versus our poll of 21.5%. So it's a beat out there as well. And as a result of which, that's flown through to the bottom line. 65 crores on the bottom line versus a poll of 54 crores as well. 17% revenue growth would mean 780 crores this quarter. That's been led by, of course, the sneaker sales for the company doing extremely well, 1.6 times what they did the same time last year. And at the same time, gross margins have improved. The company's plowed some of that back into marketing and advertising, as a result of which we've seen the other expenses jump as well. And the EBITDA margins the EBITDA has actually risen by about 12%. They've said that they've increased their distribution channel, they've increased their stores, and the next year also they will increase their marketing investment. So all this would bode well for demand. Container Corp, well, ho-hum set of numbers, 6% revenue growth, 8% growth in the EBITDA, 8.5% growth in the net profit. Nothing really to write home about, but at the same time, nothing really to sell the stock on either. The land license fee, which is a big trigger for them, also largely in line with expectations. The quarterly run rate of 90 to 100 crores continues out there. And the big trigger of privatization keeps a floor on Container Corp. So see some green on both these counters.
All right. Thanks very much, Mangalam, for that. Keep an eye out on these names. United Spirits is the next one we're going to focus on. Surbhi is here with details on the earnings from the company. Surbhi, hi, morning.
Morning, Prashant. So it was a mixed set of numbers from United Spirits. Now, the revenue growth was a big positive, but margin compression becomes a concern. They reported a revenue growth of close to 16%, which was better than expected, and this was largely led by the prestige and the above segment. Now, just remember, the numbers for United Spirits are rebased, and it includes the slum sale and the franchising of the popular portfolio. Now, the gross margin continues to see compression, largely led by the commodity inflation. EBITDA is also down 6%, and the margins have contracted significantly, and one reason for that is because of higher A&P spends. A&P sales as a percentage of sales is very high, and that may be negative in the short term, but for the long term, the reinvestment in the business is a positive. What the street may like is the volume numbers. The volume growth was 3% on a year-on-year basis, and the P&A segment, the volume growth was 10%, and the realizations were also up 12% on a year-on-year basis. Now, the stock may not see any positive big reaction because of the revenue growth, but the margin headwinds, remains a concern for United Spirits.
Okay, thank you very much for that. Morgan Stanley also adds that the liquor license plea for Pernod Ricard has been rejected. The company, Pernod Ricard, has moved the Delhi High Court, and that on the sidelines could be positive for United Spirits, though the benefits to flow through will take some time. Keep your eye on Tata Elxsi. It's reported their numbers. Revenue growth has come in at 2.5%, constant currency revenue growth at 1.6%. Now, this is slightly lower than the growth rates the company has been clocking in for the last couple of quarters. EBITDA margins have seen a fall both quarter on quarter and on a year-on-year basis at 29.8%. It's down 40 basis points on a quarter-on-quarter basis. Profits, though, are up 25%. For the full year, the company has clocked in a growth of about 25%. So while these still look like very strong growth numbers, the point is that growth rates for the company have slowed down, and it's also come in slightly lower than what the analyst community was expecting.
Okay, thanks a lot for that. So growth rates slowing down for Tata Elxsi. But let's do one thing. Let's go across to Sonal. She's tracking PI Industries this morning. Sonal, how did the numbers look?
Well, numbers were good on a YOY basis, Sonia, but they were lower than what the street was working with. Again, with PI Industries also, the growth rates have been slowing down now because last year was exceptionally strong for the company. Now, revenues are up 12% at 1565 crore rupees, but lower than the poll of 1610 crore rupees. EBITDA is up 13% at 344 crore rupees. Margins have come to 22% versus a poll of 24.7%. They are flat on a YOY basis. Profits are up 37%, but they're lower than the poll of 311 crore rupees. The company has seen gross margins expansion by 70 basis points to 45%. They have seen a 15% growth in the export market, which is the biggest chunk, versus an expectation of 10% growth. So that bodes well, but it is lower than the historical growth rates of around 25 to 30%. This was led by 17% pricing growth, but decline of 2% in their volumes. Domestic growth came in just at 1% versus an expectation of 5 to 7% growth, driven by volume increase of 2%, but prices declined declined 1%. Gross margins improved, the company says, because of favorable product mix. So yes, the numbers are good, but lower than street expectations. That's why going with red on PI Industries today.
Okay, thank you very much for that. Let's now go across to Ekta. She's going to tell us about Gland Pharma and Krishna Medical Institute. Ekta?
Thanks for that. Well, Gland is extremely disappointing in terms of a performance this time. The revenue was down 28%. The street was anticipating a decline of 14%. Margins have come in at the lowest since November 2020 when it listed. 21%. The street was anticipating 30%. Profit 74 crores and versus estimates of over 200 odd crores. Now Q4 was impacted because of a production line shutdown, reduced business from the B2C division in the domestic market, softer offtake in the rest of the world market due to tender seasonality, and all of the geographies contracted in Q4. Core markets, which is 70% of business, was down 23%. India was down 68%. Rest of the world was down 10%. Remember, this is the fourth consecutive quarter for decline in revenue and profit for Gland. Bernstein, which has an outperform and a target price of 1702, said Q4 was widely off the mark and the management outlook remains weak. For Krishna Institute, I expect the stock to be in the green, revenue up 55% year-on-year, margins at 28%, but the profit has improved to 93 crores versus 80.7 crores year-on-year. Margins have improved Q-on-Q, 28.3 versus 27% sequentially.
Okay, thanks a lot for that. I'm also tracking Uno Minda from the auto ancillary space, and as we've been telling you in the last many days, the entire auto ancillary pack has reported very good numbers, and Uno Minda is no different. It's a revenue growth of 20% that the company has clocked in. The EBITDA is up 16%. The margins have been stable around 11.1%, but the profits have gone up 27%. Their key business, which is the switches segment, they provide switches to OEMs, that saw a very strong 29% growth. The lightings business has been stable at 23% for the last 3 quarters for Uno Minda, and they won incremental orders of more than 300 crores in the four-wheeler lighting business from both Indian as well as Japanese OEMs. But what I also liked in the numbers is that the return ratios for the company have improved substantially. So, in FY22, they had just 15.8% ROCE. That has improved to 19.2%. And the net debt to equity remains quite comfortable as well. It's quite low at about 0.24 times. So, I'm going with green for Uno Minda. It has been one of the strongest stocks in the auto ancillary space. But here's a quick recap of our top stocks with positive news flow. There's Interglobe Aviation, Bata, Concor, United Spirits and Kins. While AMC should be neutral today, while stocks with negative news flow, there's Tata Elxsi, PI Industries and Gland Pharma. But there's lots happening across the globe as well, a bit volatile too. So let's get Manisha Gupta to give us a quick handle on what's happening in the world of commodities. Manisha, hi, morning.
Morning, Sonia. Thank you for that. Well, it is about the dollar strength and the U.S. Fed Chair speech today in the evening. That's the two things that the markets are keeping an eye on. And then apart from that, the G7 meetings in Japan begins today. It goes on until 21st. So these are a few events to keep an eye on. In the meanwhile, we did see the crude oil prices decline overnight. But in the Asian markets, we are trading 0.5 to 1% on the higher side. There is buying after 14% decline in crude in the past 1 month. And for this week, the crude is headed for a weekly gain of anywhere between 2 to 3% between the two varieties. What has seen decline has been the gold prices. We are trading at around March lows right now, and the gold prices have come down all the way to $1,960 per ounce. It's down by nearly 3% in this week. What also has seen a decline is the metal sector, even as a couple of days within this week were on the positive side. But copper, for example, is headed for a 5th weekly decline for this one, and most metals also posting negative week for this one.
Okay, Manisha, thanks very much for that. That's commodities in focus. We'll take a very quick commercial break here. Siddharth Khemka of Motilal Oswal Financial Services will join in for some stock calls, reaction to earnings, what should be in focus. Later, we'll connect with the management of Nazara Tech to talk about, and Notwin Gaming to talk about the fundraise that they've gone ahead with. Stay tuned, coming up.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future Or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
We don't just create new standards. We create new priorities for the Indian car buyer. In fact, we make the whole world of India's mobility new forever.
एक ऐसी धरती जिसकी सुंदरता की कोई सीमा नहीं, कला, संस्कृति और ऐतिहासिक धरोहर का एक संगम स्थल प्रशंसकों को एक जादुई क्षेत्र में ले जाता है। जम्मू कश्मीर में एक नए युग की शुरुआत।
हमें मिलकर जम्मू कश्मीर को नई ऊंचाई पर ले जाना है।
श्रीनगर G20 प्रतिनिधि मंडल को जम्मू और कश्मीर की सुंदरता और मेहमान नवाजी का अनुभव करने के लिए स्वागत करता है।
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Welcome back to Bazaar Morning Call. Well, we begin a brand new day. Looks like it's going to be a decent start, but plenty of stocks to talk about. We have Siddharth Khemka, who's the head retail research at Motilal Oswal Financial Services, who joins in now. Siddharth, hi, good morning. The stock of yesterday, or at least the earnings of yesterday, clearly was SBI. Very strong growth coming through, over 17% retail loan growth. And in general, you know, the mood is quite positive in the banking space. But on SBI particularly, would you increase your allocation here?
Yeah, very good morning, Sonia. I think the entire street was expecting strong numbers from SBI, and that reflected in the stock price movement prior to the earnings. The company did not disappoint with a very strong set of numbers aided by expansion in margins, lower provisions to help improve the overall profitability. So pretty strong numbers. We are seeing growth across segments. Other income too has been pretty stable as of now. So I think overall we are maintaining our estimates. We don't see we see that the company to continue to deliver the strong growth and lead the entire banking pack in terms of both the loan book growth, B in terms of profitability, and improvement in the ROA. So we are expecting ROAs of 1%, ROEs to improve to 17% by FY25. We have also increased our target price a bit to now 700, which gives a decent 22% upside. Overall, within the banking space, the banking sector has delivered what we were expecting in terms of the quarterly results. The PSU packs definitely has given more delta, but the private banks too have delivered strong numbers. So I think the sector would continue to do well. Although the NIMs we are expecting to normalize, we don't expect further expansion, given that the banks have now started on passing on the interest rate hike, both in terms of the liabilities, which should now help a stable NIMs from here on. Credit growth, again, on the industry side, we are expecting this credit growth to normalize from a high base, but that should be pretty strong given that the inherent demand for credit, especially from the corporate lending side, has seen pretty strong demand. That should continue to aid the growth. But on the overall picture, on the banking side, SBI remains one of our top picks within the banking space, and we have a buy rating, very positive view, with a target price of 700.
Out of the earnings which have come through, and Siddharth, you guys have a sort of big list of stocks under coverage, and you sort of will comment on earnings, upgrading, downgrading, etc. Anything this morning, based on the earnings we've seen since yesterday afternoon, where you've upped or lowered estimates out of the numbers that we have? Go on.
Yeah, good morning, Prashant. So I think several numbers that came in, we looked at definitely a lot of stocks. We also did a meeting with Cyient recently. We came out with a note today morning. We are seeing that the company is seeing a strong execution, which would sustain the profitability. On the overall IT pack, we have seen how the mid-cap IT, or the tier 2 IT players, have outperformed in terms of the delivery, in terms of the numbers, and that is also reflecting in the valuations that the mid-cap IT players are commanding, and the stock price performance as well. Coming back to Cyient, we are seeing that the company should do a 12% constant currency growth. We have seen FY23, the book-to-bill ratio being very robust at 1.3%, which should give strong revenue visibility. The company has made strategic investments, strengthening its capability to strengthen the growth for FY24 and 25. It is also doubling down on its cost rationalization efforts. So overall, we are building in an 18% constant currency growth and 14% operating margins, which should lead to a good growth. So I think that is a stock within the mid-cap IT space that one should look for. We have a target price of 1450 there.
Siddharth, we've got our first corporate conversation for the day. Nazara Tech has approved a fundraise in one of its subsidiaries, the gaming subsidiary, Notwin. They're looking to raise about $200 million, which will be done via a private placement to certain investors, which includes existing investors, but also some fresh investors. Nitish Mittersen, the founder and CEO of Nazara Tech, and Akshat Rathi, the co-founder and managing director at Notwin Gaming, are now with us. Gentlemen, morning, and thanks so much for joining in. Nitish, first question. Of this 200 crores that Notwin Gaming is raising, how much will the existing promoters be infusing? Who are the fresh investors who will be coming on board, Akshat?
Hi, thank you so much for the time. We have every one of our existing investors who are coming on board. It's a very good time in our lives where every single one steps forward. And we also have a couple of new investors who have also joined it.
So can you give us a breakup? What percentage of the funds will come in from the existing promoters? What percentage from new investors?
I think the total amount of money that is coming in from new investors stands at approximately $12 million. And the rest of it, out of a fundraise of 28, the $16 million comes in from existing investors.
Got it.
Okay, all right. Nitish, hi, good morning. Can you tell us, have you identified which are the immediate assets that you're going to invest in?
Within the Notwin, no, I think we are looking at many opportunities. And we have, right now, given market sentiments, we have many value opportunities. And given the way Notwin is really integrated into the whole esports sector, not only in India, but connected to the whole network globally, has a lot of friends in that space. I think we should be able to identify and, execute some good opportunities going forward. One of the reasons we did capital was to be able to make the right investments, taking advantage of the opportunities at hand.
So any reason why you've not used the money that you have in your own books? I understand you have over 600 crores on your books. Do you have any other use for that cash?
Yes, of course. As you know, Nazara operates in, multiple areas of business, esports being one of them. And we do have other M&A and investment opportunities as well. I think in the case of this fundraise, it was not just about the capital raise, but, bringing in marquee investors into the the cap table, which can be strategic for us as well, help on business as well. As you can see, Krafton, which had invested earlier, as well as come back, which is a great validation for us. So I think there were multiple reasons we did this transaction besides just the capital raise.
Akshat, can you tell us about these new marquee investors who are coming on board? Can you name a few? And also, can you talk about the valuations? Notwin was last valued at 988 crore in March of 2021. Now it's valued at more than 2,600 crore. We're looking at a 2.7x jump in the valuations in a span of about a little more than 2 years. In that period, what has been the growth rates on the top line and on the bottom line for Notwin, which explains the kind of valuation jump we've seen?
So look, My sector across the world is something that is valued normally on EV on sales, because most of the companies across the world are not profitable. We are privileged to have actually made profit, and we've been making profit. We have been profitable since a very long time. We actually reinvest most of our profit back into our system. So that's why you'll see over the last 2 years, we've done approximately a 70% CAGR on our revenue. On our profitability, we basically decide there's a certain amount of profitability we always want to maintain, and go ahead and plow back everything else into growth. We are a company that is based out of India, but we go ahead and build for the world. And Notwin's now in multiple countries, and that focus, that ability to go to emerging markets, which is our supreme focus in gaming. This is where all the young people are in the world. That is our focus for Notwin, and that's what allows us to go ahead and get this kind of a value from both existing and new investors.
Well, absolutely. We were just discussing, one of our colleagues put out a piece where he said that the number of gamers are 4x the number of online shoppers, under the umbrella of course, people who use a smartphone. So we know where all the money is going. But Nitish, you also said that the cash on your books will at some point be used for further acquisitions, right? And you're always on the lookout for M&A. Anything that you've identified, anything that you're looking to close in this calendar year itself? And what is the kind of watch list that you have laid out for acquisitions over the next 12 to 18 months?
Sure. So as you know, we're a profitable cash flow generating company. So there's not a lot of use of additional capital right now for organic growth. Many of our companies are growing and generating cash themselves. So a lot of the capital we do have on our books is meant for new investments and M&A. We are identifying casual gaming studios that we would like to invest in. And we are also upping our focus on the skill-based real money gaming space, which we believe with the emerging regulatory clarity will become a significant opportunity for Nazara to scale up its business in. As you remember, today we have only 5% of our revenues coming from that sector, and there's a lot of headroom to scale it up. So yeah, I think these are the areas we will definitely look at moving in the next few quarters to come.
Gentlemen, we'll leave it at that. Thank you very much for joining in, Nitish and Akshat, and wish you all the very best. We'll continue our conversations through the course of the year. Thank you very much for joining in. Get into a break. On the other side, we'll invite Shrikant Chauhan and Prakash Gaba for a few technical trades. Stay tuned.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
That's the boss's cabin. The canteen is behind. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस. इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग. एक्सप्लोर करो ऑप्शन स्टोर. Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
CNG car, there's no chance of storage.
If you get a CNG car, you've got to get a carrier.
CNG is good, but to get something, you have to give up something.
OMG! It's CNG!
Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
Okay, welcome back. The SGX will come up on your screen. It was indicating a 35 point higher start. It's where it is, but is it a mirage like yesterday? The market sold off and overall things seem to be worsening. Just the market texture seems to be worsening quite a bit. 18214. Anuj is here with a quick take on how he sees things. Anuj, morning.
Morning, Prashant. We discussed this yesterday that the texture has changed a bit to sell on rally, and I think that got respected beautifully today. But today could be slightly different for two reasons. A, today we have a Friday factor. Look, this is not a collapsing market. This is still a correction in a bull market. And B, the Nifty is very close to the all-important 20-day exponential moving average support, which is at 18,064. So, and the risk reward is not in your favor if you're shorting at 18,100. It was in your favor yesterday at 18,300, but at 18,100, it does not support you. But I'll say one thing though. Yesterday's numbers, SBI and ITC, failed to evoke any wow kind of response. And that's why the stocks have also been consolidating. For the Nifty, as I said, my base case is today we move in a 100-point band, 18,100 to 18,200. You will need to smartly play this range. The resistance zone comes in at 18,175 to 18,225, and support zone is 18,100 to 18,125. If by any chance the market starts to take out any of these two, then I think there could be a bit of a trending move. The Bank Nifty is interesting because while the Nifty yesterday made lower low and lower high, the Bank Nifty made a higher high and higher low. Very rarely it happens that the two indices have this kind of dichotomy. So the Bank Nifty clearly has been stronger, and it's still overall in a buy on dips mode because of what's happening with HDFC Bank and ICICI Bank. Most banks have come out with good earnings. Of course, the question is, was this the peak earnings quarter? On that, the jury is still out. For today, the levels I'm watching out for on the lower side is 43,700 to 43,800. And on the higher side, I think you will see profit taking between 44,000 to 44,100.
Okay, Anuj, thanks a lot for that. Have a good one. We will of course, get a couple of more views on the technicals of the market. Shrikant Chauhan of Kotak Securities is joining in, and in a bit, Prakash Gaba. Okay, Prakash is with us as well. Gentlemen, morning to both of you. Prakash, let me begin with you. This market was doing fine, but then in the last couple of days, it's sort of dithering at higher levels. Do you believe that this is just a bit of a pause before the market resumes its next leg upwards? And what is the strategy purely for today?
Good morning. Good morning, Sonia. Well, the Nifty basically is in an uptrend. I must say the 16,800 low that we saw is a beautiful low to work with, one. Number two, the setup near the lows is so good that it's a reversal pattern, which basically means recent high that we have seen closer to 19,000, that is under threat. So far, when you look at the larger trend, it's still up. Can we get dips? Of course we can get dips. It's seen a good run up, so corrections on the way is absolutely fine. Could be price-wise, could be time-wise. So what we are correction or a time-wise correction. So I would say that uptrend is still intact as long as 18,000 holds in the near term. And so dips are viable because we are seeing corrections and they are within the normal limits. When I look at Bank Nifty, it tells me it's more stronger relatively. So Bank Nifty, I would say that 43,500, very strong support zone to work with. Suppose we get dips here. Are they viable? Yes, viable closer to those zones because we could see a bounce, I think.
Okay, Prakash, morning. Shrikant is also with us. Shrikant, good morning. How are you looking at the market, Shrikant?
Good morning, Prashant. I think, this particular rally, a lot of people missed, and maybe because of that, if there is any correction, then certainly it would attract buying from all these people. So we are expecting 18,000, 17,800 is going to act as very good support for the market. But for traders, 18,300 is now going to act as major resistance. And again, if we go through with the macros like dollar index, which was around 102.5, is now quoting at 103.5. And the 10-year bond yield again jumped back to the levels of 3.65. So based on that, we are of the view that we should look for creating some short position if we see any bounce back close to 18,200, 250 levels with a stop loss at 18,300. Only above 18,300, we are expecting short covering in the market. Otherwise, the markets are going to remain in a range.
Okay, markets are going to remain in a range. Any individual stock ideas that you guys have? Let me start with you, Prakash, first.
Okay, fine. I think I must confess that it was getting stocks was a bit difficult proposition today. However, we managed few. I like Shriram Finance. Yes, it's looking good. Basic chart structure is showing some kind of a resilience on the downside. So there could be a support here. Shriram Finance is trading at something like 1,346 zones. So very good chance we can see it rise to maybe around 1,380 zones. Stock below 1,340 should just be okay for Shriram Finance. So it's a long game. Second stock that I like and I see a strength is Chola Finance. It's seen basically up move, kind of a consolidation for some 7 or 8 sessions. They're given a breakout yesterday, trading at 1,042. I think it's going to 1,070 levels upside. Stock below 1,030 on Chola Finance should just be fine. And finally, I have a stock known as Syngene. Looks like there's a sideways move with an upward bias. If it goes up, it's trading at somewhere closer to 698. If it goes up, it can go to 715 zones. Stop below 695 should just be fine on Syngene.
Okay, those recommendations are taken on board, Prakash. What are you recommending, Shrikant?
Yeah, good morning, Riba. I think, the way FIs are buying in the market, and based on that, we are expecting those flows, auto and bank stocks are attracting. So in that, we like Tata Motors. And in fact, if we go through with the global markets, then there also we are seeing a lot of activity. So Tata Motors, which was around some 530, 35 levels, from there all the way now it is correcting back to the levels of 500. I think at these levels we should be buyer with a target of again 530, 540. We can keep stop loss somewhere close to 495. And the other stock on which we are bearish is Hindalco. Based on technicals, the stock is sustaining below all its important averages, and it is finding resistance of the 200-day simple moving average. So from here, the stock can fall to the levels of 385 or 390. So at current levels, 406, 405, create some short positions with a stop loss around 415.
Okay, thanks a lot, Shrikant, for that. Thanks, Prakash, as well. Let's take a short break. We'll come back with the pre-opening rates. We'll also have Sailesh Mehta of Deepak Fertilizers and Petrochemicals to talk about their Q4 numbers. Do stay tuned in.